The cryptocurrency market is incrementally volatile. In fact, that has been the very reason why it continues to attract an inflow of investments and new industry stakeholders. With 2024 creeping closer, here's a look at some of the key trends and regulatory moves that seem certain to shape the future of Bitcoin, Ethereum, and the whole cryptocurrency ecosystem. Bitcoin and Ethereum, a summary of market trends and price predictions. Performance and outlook of Bitcoin. The flagship cryptocurrency, Bitcoin, has continued to demonstrate a phenomenal upward movement and is now trading at over $67,000. It's the next wave of buying that experts believe, a cumulative impact of market sentiment, institutional adoption, and the imminent regulatory decisions that will place Bitcoin at new all-time highs, with a possible eye over its all-time high due to the upcoming halving event and rising institutional interest. Among the most anticipated events is the Bitcoin halving, expected in April 2024. In the past, these halving periods have registered immense increases in price, driven by a fall in the supply of new Bitcoins entering the market. However, it appears that the influences of the halving events are gradually getting reduced with each instance as the market matures and becomes more liquid. Still, many investors are into the hope that it is the halving that can actually set off a new bull run, like has been the case with past trends. Human sentiment and market reactions to the Ethereum. There are major upgradations taking place in the technology for Ethereum, the largest altcoin by many measures. The recent Dencun upgrade introduced effective data storage solutions and further reduced transaction costs, which subsequently enhanced Ethereum's scalability and usability. Importantly, these critical enhancements are supporting Ethereum's role in decentralized finance and other blockchain applications. Spot Ethereum exchange-traded products are likely to be considered by the SEC, which would further solidify the position of Ethereum in this bullish run. Such a development in new financial instruments would imply that investors are getting exposure to Ethereum without actually holding the cryptocurrency, which most probably would attract a new wave of interest from institutional and retail investors. Changing more to the point of the appreciation of cryptocurrencies is within the oversight environment. The U.S. Securities and Exchange Commission has been aggressive on several actions and a creator of regulatory frameworks. High-profile cases involve the recent $5.3 billion judgment against Terraform Labs and scrutiny that is ongoing against Binance and other exchanges, further highlighting the regulatory challenges and dents across the industry. Some of the regulations at an international level have been stricter than what has been applied domestically. For example, Crypto.com has deferred its launch in South Korea pending regulatory checks, while Binance has been running into regulatory issues in most states, including the Philippines and Canada. These actions emphasize the need for regulatory observance by companies involved in crypto ventures in jurisdictions across the world. In planning are critical decisions in connection with financial products specific to the cryptos, in particular, Bitcoin and Ethereum ETPs. According to Investopedia, these events have real consequences in the market, with a product approval, though a much more accessible and regulated market for crypto investors. The market expects quite a bit of inflow to take place. But mainly, the market will react by the details of the regulatory go-ahead, and in general, the public sentiment to the case investments in cryptos as well. As the need for Layer 2 solutions increases, the mechanisms finally tackle some of the most significant hurdles when it comes to the scalability of the biggest blockchains, among them, Ethereum. Such scaling solutions tied up with data storage optimization and rollup services are expected to decrease the transaction cost and at the same time increase throughput significantly. For example, the Ethereum upgrade through Dencun has brought the Layer 2 fees far lower, significantly reducing the cost for users not only in transactions but also in using interactions in decentralized applications. The institutional adoption of cryptocurrencies continues to grow as regulatory clarity and new financial products are developed. For instance, European banks are expanding their crypto services thanks to the legal environment currently created by the MiCA regulation. That is expected to continue in light of growing demand for digital assets by more financial institutions around the globe. There are also considerations of innovative financial products discussing environmentally friendly Bitcoin ETFs, packaging Bitcoin holding with carbon credits to offset their business with crypto mining in view of environmental issues. These new products try to attract environmentalists to mine Bitcoin and offload it by making its impact on the environment nil.